Shares of C3AI are trading at $28.57 and they are up over 19% in one day thanks to a great earnings call yesterday where they reported an 11-cent loss per share as opposed to 30-cent loss, which was expected. Zooming out on the chart, you can see that they are still down considerably from their all-time high of 177.47, but they are looking good and poised for a breakout. In terms of fundamentals, C3AI has beat all four of its last earnings calls by massive margins, and their revenue continues to trend in the positive as well. The probability of bankruptcy is pretty high at 48%, but again, this is relatively normal given the size and maturity of the company. The average one-year price target for analysts is $31.30, which is 9.5% higher than where it trades today, with a high estimate of $40 and a low of $22. One thing about C3AI that makes it particularly attractive right now is its low valuation relative to its industry peers. Certainly, a price-to-sales ratio of 9.9 is incredibly high, but if we look at AI sector rivals like Palantir and Snowflake, they have ratios at 21 and 16 respectively, again compared to C3AI's at 9.9. In addition, C3AI is expected to earn around $3.14 per share by next year in terms of revenue, and looking at the trend, I would expect their price-to-sales ratio to rise to around the 12 mark, which would result in a share price of $37.72 for May 2025, or this time next year, which represents a 32% upside. Now, that is definitely plenty of upside, especially given the time horizon of just 1 year, and I'm happy that the valuation is still quite low relative to the AI space right now. And I think all things considered, investors would be wise to start looking at picking up shares at these levels and see if C3AI can continue the earnings beats like they have in the past as they continue to grow. So please drop a like, leave a comment, and I will see you next video.